next thing which we would be discussing in our today's class is abnormal loss. Now, as the name indicates, abnormal loss is not an anticipated one. We will never anticipate an abnormal loss, and it may result due to careless handling, or it may be because of some unanticipated accidents or natural calamity. Say, for example, we had flood last 2 years before. We had a flood, which is an unanticipated calamity. So in that case, many of the industries had huge loss because of the water flood. So that is considered to be an abnormal loss, and the cost of that is shown separately. It's not added to the total cost. It is accounted for in the profit and loss account, because it's actually a loss that is unanticipated by a firm. So the treatment of abnormal loss is different from the normal loss. Now, as I said in the theory part, it is loss due to avoidable and it is unavoidable. Loss due to unavoidable or accidental loss. Okay. It is loss due to no, I'm sorry. Here it is correct only. It is loss due to avoidable or accident. If you want, see, the basic idea here is, if you want, you can have careful precautionary measures and you can avoid it. Say in case of flood, maybe it was not possible if you did not have a contingent measures. Say in other case, the loss due to theft is an avoidable loss. That's why many of the supermarkets and all, they have installed cameras, CCTVs with them, just to avoid that. Then loss due to pilferage. See, when I'm carrying oil or when I'm carrying milk, I can avoid the loss due to pilferage by properly packing it, by carrying it in the right way. The loss due to maybe if your milk gets spoiled, if it is not properly refrigerated, all that can be avoided. So this is correct here. Now, units of abnormal loss, how do I find out? See, basically, in the last exercise, we said 1000 units produced and the normal loss expected was 100. So beyond that, if the difference is beyond that, all that will be coming under the category of abnormal loss. Say, for example, our expected output here, in this case, if it is 900, taking the example of last exercise, we had 1000 units. From that, we expected 900 units because 100 units were our normal loss. We expected 900 units, but if we got only 850 or 800, if it is the case of 800, 100 would be our abnormal loss. Normally expected output is 900. If the actual output is 800, then the abnormal loss in that category would be 100. Okay, so that's what we call as a abnormal loss, which is not normally taken care in an organization. Now, amount of abnormal loss is computed using the formula which is given in front of you. That is normal cost of normal output. The cost of normal output divided by normal output into units of abnormal loss. See, for example, in our last example, if the normal cost in our previous example, the normal cost was 31,400, normal output was 900, right? And the units of abnormal loss in this example, we said it is 100. In that case, it would be the normal cost is 31,400 divided by normal output is 900 into units of abnormal loss is 100. That's how we do, right? Now let's look this. See this with an example. See, in this example, you can see again 1000 units in per unit. The direct labor and other expenses are 3,000 and 2,000 respectively. And past experience show that this particular industry is having 10% loss. And that loss, the lost units carry some scrap value, which is 6 per unit. Okay. The actual production process were only 850, which is to be transferred to process Y. So it is very clear from this that there is a mismatch. Why? 1000 units were the input. The output they expected were 900. How? 10% in normal loss. So 1000 into 10 by 100, which gives us 100 units. So their expected normal was 900, but what they actually got was 850, which means they lost 50 units in an abnormal way, in an unexpected way, right? So the question itself indicates that there is a case of abnormal loss in this. I repeat, 1000 initially, which had 10% normal loss, which will give us 900 units, but the actual units which came out were only 850. So 900 minus 850, which gives us 50 as our abnormal loss. So that is the case which we are trying to solve. Okay. So first thing what we have to understand is we have to find out. I did a mental calculation. You can do it manually also like this. See, expected output it's 900 because they expected a normal loss of 10%. The expected output was 900, and the actual output what they got. Both these are given in the question. Actual output which they got was 850. So the difference between these two would give us 50 units. So that's our abnormal loss in units. Okay. Now, normal cost of expected output, we had a formula where we said the scrap value will be taken care, will be reduced from the actual cost to find out the total loss. So in our question, they said we can see that 10 per unit, and I will just show this when we do the accounting part also. We had a scrap value. So normally it is, after considering the scrap value, the total cost will be 14,400. And then we wanted to find out what is the value of abnormal loss, which is nothing but 14,400 divided by 900 into 50 units, which we did in the last exercise, the same thing. And we got 800. Now let's see how we do in this in the form of accounts. Okay, we are just see, this is the first process X. There are two processes in this, process X and process Y. So process X is the first one. When we do, we know that the material cost, the labor cost, the expenses total together, we will get 15,000. Then they said there is a scrap value for the loss unit. So it will be 100 units lost, 100 into 6, which gives us 600. And then we found out that in this particular exercise, they had an abnormal loss of 50 units. So we need to calculate the value of abnormal loss, which we did by comparing with the actual cost with the actual unit. The actual cost here is 15,000 minus scrap value, that is 600. So it will be 14,400 divided by 900, which gave us into multiplied by abnormal loss units, that is 50, which gave us 800. Now we know that the actual units which will be transferred to process Y would be 850. Why? We had the normal loss of 100 and an abnormal loss of 50. So 150 being reduced from 1000, which gives us 850, which carries a value of 13,600. It's nothing but the balancing figure. Or else you can compute it. I just said the easiest way is this, the balancing figure. Now, how did I get the per unit cost? 16. It's nothing but 13,600 divided by 850, which gave me the per unit cost as 16. Okay, so this is very simple. What you have to remember is normal loss is anticipated. It generally carries a scrap value in most of the industry. But if I take, say, for example, milk. Okay, in milk industry, if they say that the normal loss of the product due to maybe spoiling, the milk getting spoiled, that is 10%. We will not, or we may not be having, in the general course, we may not be having any scrap value until otherwise they have made an arrangement for making curd out of it or for making butter out of it. If they had made it, yes, they will have some scrap value. Otherwise, they may not have the scrap value. But in all other industries, say for example, timber industry, they have timber dust, which might be used for burning, or for some other purpose, maybe as fillers for some other products. Like so, likewise, they have some kind of scrap value, which we consider here also. In this case, this amount of scrap was given. It carried a per unit value of 6 rupee. That's why 100 into 6, which gave us 600. Now, the last part of it, sometimes we might be asked to prepare the normal account and abnormal account. In such a question, if we stop by doing just the process X account, we may not be able to get the full mark. So in this question also, they've asked us to prepare the abnormal and normal account. So abnormal account, it is, as we know that we have an abnormal amount of 50 units. So it is to process X 50 units, which carried a value of 800. And here they said that it carries a scrap value. It depends on that particular condition. If it has a scrap value, we can show it. No, because they said it carries a scrap value of 6 rupee. We assume that this is applicable to this lost unit also. So we took 300, and the remaining balancing figure is actually a loss that is transferred to profit and loss account. 500 rupees is transferred to profit and loss account. 300, we got it as a scrap value. We assume that the abnormal units also carries a scrap value. So 50 into 6, which gives us 300. The remaining value is taken to the profit and loss account. That's why to cost in profit and loss account, 500 rupees. In case of normal loss account, we already prepared. That is, we had a loss of 100 rupees. We got a money of we had a loss of 100 units, which carried a value of 6 per unit. We got scrap value as 600, so that account got balanced. Okay, so in today's class, we discussed about the type of loss that can happen when a manufacturing concern is going with its production process. The particular nature of this production process, which we are discussing it here, production happens in different stages. That's why we have different process account, like process 1, process 2, process 3. It carries like this, right? So we categorize the losses into two. One is normal loss, another one is abnormal loss. In case of normal loss, we anticipate that yes, this is going to happen, and in the normal case, we arrive at some kind of scrap value for the units lost. Okay. If it is not mentioned in the question, we should not account for it. But in most of the question, they come up with this because in the real industries or in an industrial scenario, they arrive at some kind of scrap value for their products, for the products lost in the normal condition. Now, coming with the second type of loss which we discussed were abnormal loss. It is loss due to carelessness or unanticipated conditions or accidents. All these, maybe say for example, loss due to fire is an unanticipated. If possible, we could control the amount of loss by having proper fire management system, or maybe by having insurance, fire insurance. Right, we learned that. So that is possible, but if that no such precautionary measures were taken by the industry, automatically they will incur a loss, which will be brought under the category of abnormal loss. Now, accounting for cost in case of the normal loss, it is inflated in the cost per unit itself. It's added to the total cost itself after reducing any scrap value, if at all if it's mentioned, right? But in case of abnormal loss, generally it is transferred to the actual loss incurred is transferred to profit and loss account. In this case also, if there is some scrap value, we can account it for, and the remaining is transferred to the, as we say, to the profit and loss account. So this is the case of normal loss and abnormal loss when we are talking about process account. Now, the third thing which we would be discussing in the next class is about abnormal gain, which is also important, which is in the normal case, it is not anticipated, but sometimes better management can give us abnormal gain, which we will discuss in our next class.